All right. Hi, everyone. Welcome back to the show. If you're new here, I'm your host, Charles. Make sure to smash that like and subscribe button, and let's get to it. So, on today's episode, I'm joined by Kevin Lee, who is all in on his latest Bitcoin and digital credit venture. It's called Saturn. And today we're going to be learning more about it. But before we get into more about what Saturn is and why it's relevant for our audience, Kevin, can you give us an overview of your background? Where'd you grow up? What'd you study in school? Where did that take you professionally initially? And what led to your Bitcoin and crypto aha moment?
Yeah, so hi everyone, I'm Kevin. I grew up in Shanghai, but returned to the States since I was young. So I grew up in Boston. I did my undergrad and my master's in a data science major. So have been really focused on the data analytical side. And I've been investing in equity markets since I was 18. So have been investing for 8 years now. And I joined Artemis, which is a Web3 data analytics firm there, and I was the lead researcher and analyst there. So did a lot of investment data work, and was really focused on like the Web3 side. At the same time, I had a huge passion on crypto equities. So when DATs kind of popped up, I took up the DAT initiative at Artemis, and I really led the product development there. I worked with all of the DATs, and then even advised some of them. And when I realized that um, DeFi was looking for off-chain yields, private credit and corporate credit, I made this epiphany in the September of 25, and was like, okay, well, if DeFi wants off-chain yields, and strategy has created the best off-chain yields ever, why
Hmm.
don't we just merge these two? Um, so I think that's kind of how Saturn really started. It was in the Bitcoin unconference of last year, and Saylor was asking everybody, who should we sell digital credit to? And because of my background in crypto and DeFi, I realized that the on-chain economy is actually the best people who would understand Stretch. So that's kind of how Saturn really started.
Wonderful. And can you tell us, since your time, I'm curious, since your time getting into Bitcoin, into crypto, watching digital credit come onto the scene, how have you seen the space evolve in any interesting ways, both on the positive side and on the negative side?
Yeah, I think since 2024, I think the integration of crypto and traffic has really accelerated, right? I think pre ETFs, it's really been two worlds in a separate place. But once the ETF passed through, there was a gateway where capital can flow in. And with the advent of a pro crypto administration, right, all of these off chain assets, real world assets, is coming on chain. And DeFi is really the infrastructure for these assets. So I think the positive side is that this convergence really unlocks capital into crypto. And I think the negative side is you're seeing more and more correlation between the like Bitcoin and traditional finance markets. So a lot of people are complaining, but I think as you get integrated into like global capital markets, this is like a result of that.
Okay. Can you say more about that in terms of how that resolution might come about? Because it sounds like maybe you don't see it or, Bitcoin, other crypto assets, maybe continuing to trade in correlation with more traditional assets. You maybe see those two converging eventually. Can you say more about that?
Yeah, I think as Bitcoin becomes a percentage of global or TradFi portfolio, and when there's, I guess, volatility or movements within the traditional finance markets, it's just natural for these PMs and traditional finance to really rebalance. And I think we're beginning to see that as well, right? I think when Bitcoin fell from 85K to 60K a few weeks ago, there has been people saying, "Oh, it's a software trade. It's a software deleverage," or if it's like a like a silver deleverage as well. So you're beginning to see these correlations getting more deeper, and I think this is only going to get more and more um, integrated, especially as more capital comes in.
Gotcha. Okay. And are there any interesting stories that you've experienced while being in crypto that you haven't shared before?
I think what's very interesting about crypto is there's a lot of crypto native elements, right? I think the reason why I got into crypto, actually, before I went into crypto, I was working at a traditional finance AI VC. And the reason why I got in was because my boss was a huge Stepan fan. And Stepan was an app for people to make money while they run. So that really got me intrigued. And back in 2021, there was like like play to earn, run to earn, and a lot of these really unique um, business model or tokenomics. So I think like that was really fun for me. That it wasn't apparently like in TradFi itself.
Okay, quick note before getting back to the show. If you're an independent investor or an investment professional at a venture fund or another finance firm, then join me in NYC at the OPNEXT conference on April 16th at the New York Times Center in Midtown Manhattan. This is the event to learn more about quantum computing, bleeding edge Bitcoin tech, and topics that will define Bitcoin's future. Meet institutional investors and developers over some of the best programming and Bitcoin tech, a catered lunch, and a pub key after party. They only have 200 seats and they're almost sold out. So if you're a founder or just want to learn more about Bitcoin tech, go to opnext.dev and use code Charles for 25% off your ticket. That's opnext.dev, code Charles for 25% off. I'll see you there. Cool. So let's move over to the Saturn side. I want to hear more about, and I'm sure our audience does as well, what you're working on at Saturn, what this new project is all about. So Saturn, it's a digital credit, you know, infrastructure backed essentially by Bitcoin, and as of right now, I believe just STRC Microstrategies preferred security that pays roughly 10% or so. In your own words, can you tell us what Saturn is, how you came up with the idea and actually move from ideation to execution, and what your overall vision for the company is?
Yeah, so I think the overall vision of Saturn is really to accelerate the global adoption of digital credit. I think um, as we've like mentioned earlier, right? Like the biggest issue right now with digital credit is who should you sell it to, and like what is like the distribution channel. So for Saturn, we are building the first digital money layer on digital credit, and we're kind of like this first application layer. And I think the key thing about what we want to do is we want to make Stretch composable and programmable and utilize the DeFi infrastructure in a way so that we can create different flavors and different trades of Stretch that you cannot get in TradFi. So, for example, one of the reasons why I started Stretch, Saturn, is because I try to loop or leverage Stretch on Robinhood, but the LTV there was 50%. So the max leverage I can get was a 2x, right? But because I worked in crypto, you wouldn't realize that the leverage and the LTV there would be much higher. So
How high?
so I think as we talk with curators and these borrow lending protocols, we can get around an 80% LTV. So that allows like a 5x, 6x max, right? Of course, I'm not saying 5 to 6x is safe. I think 3x is safe. But because of the flexibility of DeFi, right, it allows us to unlock these trades that a regular retail or even an institution can't get in TradFi.
Mm,
So I think, as I was mentioning earlier, the like TradFi and crypto is converging, right? Most projects is like, okay, I'll take an off-chain asset on-chain, or like strategy is taking like an on-chain asset off-chain, right? What we're really doing is we want to combine the best of both worlds. So when strategy took Bitcoin off-chain, it created different securities of Bitcoin, and it in some ways made it better, right? And we're just bringing this back on-chain and utilizing the benefits of the on-chain economy. And in doing so, we create new market structures that wasn't available in the past.
mhm. And for those who maybe aren't interested in, using leverage, is the other sort of big unlock here that Saturn provides is that instant, and 24/7 liquidity. Like, if you're not interested in using leverage and just want to buy STRC, why not just buy STRC as opposed to a derivative product? Or again, is the big idea that it provides instant and 24/7 liquidity?
Yeah, so I think about this from a user perspective, right? I think from a US like a US user, I mean, to be clear, we can't sell to them. But for people who can access Stretch, I think the unlock there is what you can do in DeFi that you can't do in TradFi, right? And then the other group of people is can you deliver the digital credit with the blockchain to people who don't have access, right? Can you broker the unbroker is what the term is being said. Like the first part of crypto is to bank the unbank. The second part of crypto is to broker the unbroker. And we were trying to understand how many users globally, right, have an access to a US broker account. So what we did was we added up all of like the top 10 international brokers online. And because like the top 10 represented the whole world actually pretty well because the 11th was very low. And total, there was 32 million funded accounts. And today, there's already 500 million users that have access to stablecoins. So by delivering digital credit with stablecoin and blockchain rails, we can increase the international investor base by 10x, right? And when you think about the financial infrastructure in a lot of these long tail and emerging markets, actually stablecoins and blockchain infrastructure is like the de facto infrastructure. And for a lot of places like China, for example, it's very hard for you to get like a US bank account and a US broker account. But many of the users there have access to stablecoins. So I think part of the unlock as we bring digital credit on chain is you can make it composable and programmable. But the other part is can we get to the long tail markets, get to the long tail users that you can't get with a TradFi like application.
And did I hear correctly? Are you guys just focused on international um, users or users outside of the US? Did you say that you guys don't currently serve US users?
Yeah, so we currently don't serve US retail. We can work with US accredited investors. But mainly I think the value prop of companies building on Saturn, building on Stretch is can you get to these long-term markets? Can you onboard investor bases that otherwise couldn't come? I think that's like a big value prop for us.
Okay. And do you anticipate that in the future you will be able to serve US retail, or is that not necessarily in the cards for you guys?
Yeah, so I think recently SEC came out with a statement about how basically it just said these are the regulations and what you need to do in order for us to sell to them. And for us right now, to be honest, as a startup, this regulation is first unclear. It's early, and it takes a lot of time. So the focus for us right now is to expand the investor base, and over time, as the regulation and like the SEC ruling becomes more clear, I think the ultimate plan is we want to really give access to everybody.
Gotcha. And you guys are currently 100% stretched, as we mentioned. I'm curious, in the future, will other digital credit assets be included in your products, and how are you thinking about that?
Yeah, I think there's three stages of Saturn. Um, the first stage of Saturn is we're gonna mainly gonna be Stretch, and Stretch is a way for us to bootstrap. And then the second stage of Saturn is we want to buy a basket of different STRC alike instruments in which we're seeing more and more DATs doing it, right? So we would consider buying SATA or Mars from Petaplanet. So the stage two is we would diversify, and stage three is we would want to become a part of the origination process. So can we issue credit with DATs? Can we design them? Can we help them issue credit natively on chain?
Hmm.
So I think there's like three stages of Saturn, and for the foreseeable next year, based on the liquidity profile of Stretch and SATA, it's mainly gonna be Stretch.
Okay. And what would be the bar or criteria for deciding to include additional assets?
Yeah, so the most important thing for a company like us as we kind of bridge off-chain stretch on-chain and on-chain stretch off-chain is the liquidity profile of these instruments. Like, for example, if I get a $5 million redemption, can I actually sell the underlying stretch or preferred equity instrument? So that's actually the most important thing. So I think as we look at like Mars and Theta, is really understanding, oh, what is the liquidity profile of these instruments? Is it liquid enough for us to kind of buy them, right? Especially during extreme events. During extreme events, if liquidity pulls, what would the liquidity profile look like then?
Okay. And as you guys look to add new products that meet your bar, would you be essentially diversifying the current product that you have? So a mix of stretch and something else, or is the intent to create other products that are backed one to one? So, for example, using Strive's perpetual preferred SATA as a totally, separate product that you guys bring to market.
The current plan is to stick with one, I would say. But as we go to the market and talk with our customer base, I think this might change. Um, we do have some investors or customers that we're talking with right now, and they're like, "Oh, we only believe in stretch.
Mhm.
You guys buy SATA, I would have to reconsider."
Mm.
So I think it's like a really tight balance that we have to make. It's like you give up some issue, like you would increase or you would decrease issuer risk, but at the same time you would also increase the liquidity risk of these other instruments. So it's a balance that you have to make.
Yeah, and instead of commingling them, though, could you guys just set up a separate product for SATA, or would that not make sense for you guys operationally to be managing these 2 separate instruments?
I think the key thing when you bring stretch on chain is you need to build the liquidity for these assets on chain, right? Because without the liquidity, a yield product would be very costly, right? If the yield is 10% and the spread cost there is 1%, that would make your profile much worse. So it's once we have built the liquidity for SUSDAT, we will want to use that, right? And if we were to build a new product, then we would have to build the liquidity for this new product as well. So that is like a factor that we would consider. But at the same time, like I said earlier, if users are like, okay, we're not going to buy this instrument unless it's just stretch, then we would have to kind of create like a new product for that.
I see. All right, wonderful. And so let's talk about maybe the risk profile here. What are the perceived risks of what you're working on here versus the real risks with your strategy? And what steps have you and your team taking to address these risks?
Yeah, I think the real risk with these preferred equity products is that it's not collateralized by the Bitcoin. So if Bitcoin falls and strategy doesn't have the ability to pay, then strategy could really choose to not pay, right? So that is in the contract of STRC and digital credit. Unlike, for example, most digital credit on chain, which is over collateralized, like you have a claim there. So as we talk with like our customer, I think this is like an education gap that we would have to do. It's like, okay, w- this is digital credit, but you don't have a claim on the Bitcoin. So how do you mitigate risk there? Well, I think one of the beauties of stretch and preferred equity products is that there's digital risk and there's liquidity. So you can really manage and watch kind of how the Bitcoin rating goes, and then sell or buy your position, right? So for a product like us at Saturn, we have a feature called a dynamic reserve. And we would start selling stretch into T bills whenever the BTC rating gets below 4, right? I think the beauty of the digital credit, like I said earlier, is that you can observe the risk and you can take proactive management. So by the time Bitcoin really reaches 10K, we would be out of it. And I think that's what's powerful of these tools. It's not that there's a 5-to-1 margin, it's that there's a 5-to-1 margin and we can buy in or get out, right?
Okay. And what's in it for Saturn? How does Saturn actually make money?
Yeah. So Saturn ultimately takes a 10% cut of the yield that we pass through. And we take 10% because we're building this liquidity layer on chain. And as we get our assets integrated, I think that's the reason and the business model of Saturn.
Okay. And when did Saturn launch, and how much capital have you guys been able to pull in so far?
Yep. So Saturn today, it's still pre-product. We're launching our private beta in a couple of weeks, and our public launch will be in April. As of today, we have around $30 million of capital committed on day one. So we've been talking with our clients, understanding what they want, and at this point, I think DeFi and people abroad is very interested for a yield like this, especially when yields on chain and yields around the world is collapsing. So I think there's two interesting stats, right? First is the benchmark yield on chain is generally 4 to 6% on borrow-lend protocols like Aave and Morpho. It's over collateralized by altcoins at a ratio that's 150% to 200%, right? And when you compare this profile to Stretch, Stretch is paying 11%, is backed by Bitcoin. The backing ratio is 5 to 1. So the superior yield is very obvious, right? You have a higher yield, you have a higher yielding source backed by a better asset with a higher backing ratio. And the other stat is we've looked at the current running protocols in DeFi, and there's only 7 protocols today that can pay a 10% plus base yield at a $50 million in TVL size. And there's only one protocol that can pay 10% plus at $153 million in TVL size. So the issue with DeFi is that there's no yields at scale at institutional scale. And it really just collapse when a bear market comes, right? And Stretch is a yield that's durable and scalable. It can pay an 11% during a bull market and a bear market. It can pay 11% at a $3 billion size. And when they eventually scale it to the $30 billion size, they can also pay that as well.
Mhm.
So we really think Stretch will not only redefine all of TradFi, it would also redefine like the on-chain yields.
And with the 30 million in pool capital that you guys have committed so far, is that primarily institutional?
Yep. So for the first capital that would come into a protocol is mainly institution, yield funds, family offices, and a few like big whales who wanted to test out the product.
Gotcha. Okay. And Kevin, as we look to wrap here, I'm curious from your end in terms of the major innovation or breakthrough here. Why do you think digital credit is such a major breakthrough, specifically in crypto, where there have been companies that have offered, to your point, high yields before, with many stories that ended very poorly. What is strategy really unlocked here that makes Bitcoin backed digital credit different?
I think it's two things, right? I think digital credit or credit backed by a digital asset is not a new concept in our eyes, right? There's been many forms of credit on chain. But the biggest issue of borrow lend on chain is really the lending liquidity. Like, is part one. It's like, do you have that much capital to lend out, right? And the beauty of strategy is that they have tapped into the TradFi markets for the lending liquidity, which is essentially infinite, right? If strategy was to borrow $15 billion from Aave, that would suck up half of the lending liquidity on chain and boost borrowing rates way high up, right? So a credit at the size of strategy just doesn't work on chain today. So that's number one. I think number two, why strategy or it has worked better for strategy is because I think Bitcoin has also really matured. So the volatility profile has decreased. And when you really create these credit instruments in off chain through like a preferred equity, you could really unlock a type of credit that's unsecured, right? When you have a secured loan that's collateralized by your Bitcoin, first, it's capital inefficient. And second, because of the liquidation risk, it limits kind of like the demand side of it, right? Like a lot of people don't want to be liquidated, but because you've structured it as a preferred equity, I think that demand side will be much higher. And I think fundamentally, the key metric that we want to understand between this convergence of traffic and crypto is really adoption of user count and adoption of capital, right? I think everybody wants Bitcoin exposure, but not everybody wants Bitcoin exposure to like the volatility. And the beauty of the digital credit instrument is that they've really created products for different capital pools and different risk profiles. So Stretch, Strike, Stride, Stream is for different capital pools around the world. And once you have collapsed the duration of the credit instrument, you really increase the investor pool of people, right? Because everybody wants a 7%, 8%, or 10% yielding asset with no volatility. And I think that's the key thing. I think not everybody is suited for Bitcoin, but everybody would be suitable for Stretch. And I think that's the unlock. And as we talk with, like, for example, my parents in Asia or other people in Asia, right? They don't like Bitcoin, but they like a 7% or 10% savings account. Uh, right. So I think that's the most important part is you really just unlock the investor profile that can come in. And a lot of people have been asking me and other folks at Saturn is like, okay, like what would make Bitcoin go up, right? Like what types of new capital would come in? And I think the amount of capital that would flow in from digital credit would be insane. When we talked with Sailor at Las Vegas,
Mhm.
one thing he said that even blew our expectation is that Stretch will be the main primary like funding tool. And today Stretch is like 40% of all of the entire debt stack. In the future, we're expecting 80% or 90% of the debt stack. And what that means is if Bitcoin hits $1 million in 10 years, you could theoretically see a 500 billion to a $1 trillion instrument of Stretch. And we think that is very, very cool.
All right, Kevin. Well, thank you so much. I've enjoyed the insights you've been able to share today, and yeah, I think you have an interesting and pretty big vision here. So, best of luck to you. Where can people watching this go to learn more about yourself and what you're doing with Saturn?
Yep. So we have an X account at Saturn underscore credit. We're gonna have a pretty big announcement for our launch for our private beta and public beta soon. So stay tuned. My personal account will be at Kevin LHR88,
Mhm.
where I'll be posting more insights or things I find very interesting. But yeah, please follow us. And if you want amplified digital credit, if you want leverage, uh, please reach out.
All right. Thanks so much, Kevin. Take care, everyone.
Thank you.